welcome back to another market outlook trading video. So in this video, I'm going to go through this currency pairs. I want to show you the trading bias for the new week as well as the key levels to focus on. We had a very good trading week this week. This week is the 3rd of May. Okay, we traded from 3rd of May to 7th of May, and today is the 8th of May. So made a lot of money this week. Hope you trade safe and you made some money if you had followed us on Telegram. So if you're new, if you are a YouTube subscriber and you have not joined us on Telegram, definitely check out our Telegram channel because it's free, and I'll leave a link to the channel in the description down below. Okay, we send out our signals here for free and you can just check that out. Now back to today's video. As always, I'm going to be using the MPE trading strategy. Okay, if you are a new Telegram channel subscriber and you do not yet understand what the MPE strategy is, okay, you're new, then definitely go grab this day trading guide. Okay, again, it's totally free. Okay, just head over to the link in the description and you come to this page right here. Okay, just input your email and then we'll send it to you, and you can use the weekend to go through this entire trading guide. Okay, so the MPE trading strategy is really simple actually. It's just using the 3 steps that we use to analyze a chart. It's market condition, price level, and entry. So I'll be using this framework when I'm looking at all these currency pairs here to show you the bias as well as the key levels. So let's jump into the next week's market outlook. Okay, next week it's the 11th. I believe it's the it will be the 10th. Okay, it will be the 10th of May to 14th of May. So we always prepare over the weekend so that we know what are the key levels to focus on. So as you can see over here, we always start off with the economic calendar. We look at what are the currency pairs which are likely to move. So you can see next week it's quite quiet. We don't have nothing, we don't have conferences, which we personally hate. Okay, if you are an existing subscriber, you know that we always say that conferences are the weeks where it's very difficult to trade, like FOMC's, ECB press conference, BOJ. These are the kind of weeks which we don't recommend being too aggressive because it's the kind of weeks where it's very difficult to trade. But next week is looking very good. It looks, it's nothing much. So these are the kind of weeks that we are probably going to make a lot of money. So this is the kind of weeks that you need to maximize your profit. Okay, so let's go into the charts. I like to start off with DXY. So if you are new, DXY stands for Dollar Currency Index. So it basically shows you the strength of dollar. So if you see that DXY is dropping, then that means that US dollar is weak. Okay, personally, we do not trade directly into DXY. Some of you do not even have DXY in your MT4 trading platform, right? But we always start with DXY because we want to know the direction of dollar. Dollar direction will tell us the direction for all the FX major currency pairs such as the euro dollar, pound dollar, dollar franc, Aussie dollar. Okay, if dollar is strong, then obviously euro dollar is going to be weak. Okay, so that's how we use it. Now let's look at this right here. Okay, so you can see that recently, right here on Friday, price actually broke below this ascending trend line. Okay, so this is a very big thing. Now, if you were to look at the market structure, there's actually a swing low right here as well, which was broken. So remember, we are using the MPE trading strategy. So M stands for market condition. So right now, we're actually in a downtrend. So if you can see, it's actually pretty clear. You have a high here, you have a low, you have a lower high, and of course you have a lower low right here. Okay, this is a lower high and this is your lower low. Okay, so market condition wise, we are bearish. So of course, if we are bearish, we want to sell. Okay, again, this is all written in the day trading guide. If you are new, please do not go counter trend. Please, do not try to buy when the market condition is bearish. Okay, the easiest way to make money is to go short when the market condition is bearish. So right here, this level is broken, and of course this is the recent swing low. So we are just waiting for price to pull back. Okay, let's say you want to trade DXY, you just wait for price to pull back to this level, which is a P of the MPE, P for price level, and then lastly you wait for an entry trigger. Okay, your entry trigger should be in the form of a bearish engulfing shooting star and perhaps even a piercing candle. Again, this is covered here, but I'm just taking you through the steps and helping you identify the market condition and the price level. So for DXY, bearish bias, Key level right here, just waiting for it to short. If this level holds as resistance, then the next level we are probably looking at will probably be the this swing low here, this spike low right here, which is also very close to this entire swing low right here. Now let's move on to euro dollar. Now euro dollar is a little bit tricky, so please listen carefully. Okay, I've already analyzed this, so I want to break it down for you. So right here, euro dollar, this is a swing high right here. Okay, this 1.2131 is a swing high. However, if you were to look back historically, you look over here, you can see that this is actually an entire zone of resistance. Okay, so what happens is that price has not successfully broken out of resistance yet. So I'm very worried, some of you might just start chasing the market right here and you start buying into resistance. Okay, so this is why it's very important that you watch this kind of market outlook video, because this is where I really translate my experience to you. I really share with you what I'm looking at. Okay, it's not theory, it's not, it's not like this day trading guide which is theory. This is actual experience that I'm trying to impart into you. So this is why you need to take note of these levels and you need to spend the time to watch this video. Now, price is just right into resistance, okay? And of course, you have support right here. Our support, it's actually, if you see, it's actually a cluster. Again, it's a cluster of support here. Okay, you can see that this is supported, and somewhere here and here as well. So right now, price is very high. So please do not chase it. Ideally, if this resistance hold, then just wait for price to retrace down. Again, market condition is bullish because it's a very clear uptrend. Okay, if you can't see it, let me just break it down for you. You have a high here, you have a low, you have a higher high. So again, we're in an uptrend, we want to buy. The next thing we need is we need a zone of support to look for our entry. So right now, price is not at support, so just wait for it to come here. Now, the other scenario is that price breaks out. Okay, and then what you can do is just wait for price to retrace back into this zone and then look for a candlestick pattern and then you take the trade up. Okay, it's the same thing. So there's two possible scenarios. But please, okay, please, I want to warn you again, please do not chase the market and start trading here and start buying into here. And also do not start looking to sell, because again, we are following the market condition and the market condition is bullish. Okay, so don't be a hero, right? Just follow the trend. Okay, let's move on to pound dollar. Pound dollar is a bit clearer, okay, because you can see that on Friday, price closed barely into resistance, almost exactly, or rather exactly into resistance. You can see this is a very clean level, okay. So this kind of, scenario should be quite clear to you that you shouldn't be chasing the market, okay. It's not like euro dollar, which is not so clear. It's a bit tricky because there's a higher level right here. But for pound dollar, it's very clear. So it's rather easy to trade for pound dollar. This is resistance, this is support. Okay, market condition is bullish because you have a high here, you have a low, okay, you have a higher high, and of course you have a higher low. And if you look at the bigger picture, this is actually inverted head and shoulder. Let me show it to you. This is the left shoulder, this is the head, and this is the right shoulder. So bullish bias. The only problem right now we have is that price is into resistance. So again, same like euro dollar. Either you wait for price to retrace down here, look for a bullish candlestick, or you wait for price to break up, retrace back down, okay, give you a price action candlestick pattern, and then you take the long trade. Okay, very simple setup. This is the currency pair that I recommend that you focus on trading for next week. Now, let's move on to dollar franc. Dollar franc was a trade that we talked about last week. We said we wanted to short, and ideally we wanted to short higher. Okay, but what happened was that price just did, just a slight retracement up. Okay, this is Friday, Thursday, Wednesday, Tuesday, Monday. So it just spiked a bit up without hitting our resistance zone and then started selling down. That's fine, okay. Remember, we always want to wait patiently at the level. Sometimes it happens, sometimes it don't. Okay, but please do not chase the trade, right? We just look at another currency pair, look at another setup. So right here, this was the key level, that the other key support that we drew in last week. So on Friday, price has already broken this. So there's actually a lot of room for price to drop. Okay, now coupled with the fact that next week we don't have any major news, okay, I do expect that price is going to just come down rather easily. Right now we are a bit late, okay, because if you were to take the trade right here, let's say you were to take this trade right here and you do something like this. like this. Okay, you can see that your risk to reward is very bad, so it's not something I recommend. What I recommend is again, wait for the retracement up here, which we may or may not get. Okay, if it doesn't happen, then it's fine, but if we get a retracement up here, look for a candlestick pattern, okay, and then short it down. Okay, but bearish bias for this, very obvious, but let me just show it to you in case you can't really see it. Okay, you have the high, you have the low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, so again, market condition is bearish, key level is here, and you know, we just have some room to short price down to the next support right over here. Okay, let's move on to Aussie dollar. Aussie dollar has been consolidating for some time. I didn't really like trading this. In fact, this is the currency pair that we talked about last week. We say that be very careful that there is a lower support here. Okay, let me just clear this so that it's clearer. I don't want to clutter the charts. So right here, you can see that there's this level here actually that we warned you about last week, and price, you know, kind of almost spike it. So again, this is very important that you watch this kind of videos because we give you this kind of levels to take note beforehand. If you didn't know that, you know, this is a support, you might have shorted somewhere here on a lower time frame. Now, with price breaking above this resistance here, the market condition is a very clear bullish case. Okay, so let me just show it to you why this is bullish. You have a high here, okay, again you have a low, and you have a higher high, and then you higher low right here, and of course one more higher high. So we are in a market condition that is bullish, very clear, and price has just closed above this. Okay, but again, I want to caution you that there is actually a level right here as well. Okay, so same thing, same like the euro dollar setup, there is a swing high right here, and I do not know if this level is going to be resisted or not. So please, if you want to buy, wait for price to close above the entire zone of resistance and retrace it. You know, wait for retracement down, candlestick pattern right here, and then you take the long up. Okay, please do not chase the market. Okay, on Monday, please do not go in long and start buying here, because what might happen is that price might do a fake out right here and start retracing down lower. Okay, so two scenarios: either you wait for a retracement down here, or you wait for price to break and then retrace back down here, and then you take a long targeting the recent swing high right here. Okay, so just be very careful about this level. Now, Kiwi dollar. Kiwi dollar, same thing. Okay, same thing as Aussie dollar and Euro dollar. It's the same scenario. Now, the market condition is bullish. Again, very obvious. This is the high. Let me switch over. This is the high. This is the low. Higher high, higher low, higher high. Okay, so bullish. We don't want to be selling. And you can see that there's actually an inverted head and shoulder right here. Left shoulder, left shoulder, head, and then right shoulder right here. Now, the problem is that this swing high right here is not broken. And if you were to look over here, okay, let's say you extend it, you can see that this was also a swing high and this level as well. So right now we are directly into resistance. So again, same thing. If you want to buy, wait for price to break above, look for a retracement down, candlestick pattern here, and then you target right here. Okay, this is how I do it. Okay, the other way would be to wait for price to retrace down here. But personally, I prefer to trade the breakout of this, as in the breakout retest, rather than price to come down. Okay, because if price were to come down, then what you might see is a double top pattern, which is not exactly very bullish. So between the two scenarios, I prefer that we trade this setup right here. Now let's move on to dollar CAD. Dollar CAD is a clear downtrend. We've been talking about dollar CAD for ages because on the daily chart it's a very clear downtrend. If you tell me that this is bullish, then there's something wrong. There's obviously something wrong because it's very clear bearish trend. Okay, no matter how you count the waves and the ebbs and flows, it's still bearish. So you should be focused on selling. Okay, the market condition is bearish. Now the question is, where should you sell? Okay, right now we're in the middle of nowhere. We're in the middle of a resistance and support. Okay, so please do not chase the market again. Okay, this level here, as I explained last week, actually came from this swing low here, and then the next level is this swing low right here. Okay, nothing too difficult. It's not difficult to spot. The only thing that we need now is we need a price to retrace. Okay, we have the key levels and the market condition as bearish, but we just need price to retrace here, form a candlestick pattern, and then short it down. Okay, we may or may not get it, but just be very patient. Do not chase the market. Okay, let's go to dollar yen. Okay, dollar yen, it's showing a little bit of bearishness. Okay, so let me just run it through with you, the market condition first. So if you switch over to the line chart, you can see that this is actually a more of a bearish scenario, because you have a high here, you have a low, you have a lower high, and then you have a lower low, and this is a lower high. More importantly, if you switch back to the candlestick chart, you can see that this is the left shoulder, this is the head, and this is the right shoulder. Now, the problem is that right now price is sitting at support. Okay, if you look left here, this is the market structure, this was support, this is support. So right now price is at support, so it's a bit too late for you to short. So what I would prefer to do is I prefer to wait for price to break down. Okay, retrace back up, show me a rejection candle, and then I'll take the short down. That's the way I would trade it. Okay, I don't recommend buying at all. Okay, I don't recommend doing this, because again, the market condition is bearish, and we see that this is a very big head and shoulders pattern. So it's better to stick to the bearish side of things and just wait for this level to be broken. Now let's move on to gold. Gold finally broke out of this resistance right here. Okay, gold has been something that we personally have been looking a lot on. Okay, if you know, you are part of our Telegram channel, you know that we are testing a gold algorithm right now. Okay, so when it's ready, we'll release it to you. But for now, we're still trading manually. But anyway, we don't really send out gold trades, because the lot sizing is different, and we've gotten complaints before because subscribers blow their account because they do not know how to manage the risk. So we don't really send signals out, but we'll give you the key levels. So right here, market structure is bullish. You have a high, you have a low, higher high, high low, higher high. So market condition is definitely bullish. So you want to be buying, okay? You don't want to be selling. Now the question is, where do you buy? Now this is the key level that we have for you, okay? It's not difficult to spot, because it's just the recent swing high here, and you just need to wait for price to retrace that. Again, this is like dollar CAD, because it's in the middle of nowhere. It's in the middle of support and resistance. So just be patient, wait for price to come down, look for an entry candle, and then you can take the trade up. Okay, very clear setup, but you just need to be patient. Now let's talk about Euro Pound, and then I'll end off with Pound Yen. Okay, Euro Pound, it's more bullish, I would say. Okay, in the previous market outlook videos, I did bring out this trend line before. Okay, I did say that this trend line is broken, and this swing high right here, okay, this one right here is broken as well. So that's why the market structure is actually bullish. And if you were to look into this movement up, you can see that there is a lot of strength in the bulls. Okay, so let me show you what I mean. So you can see that this movement up, you have 3 big candles here, and then right here you have another very big movement up, and then here is a potential a movement up as well. Now if you watch one of the previous videos I upload, okay, I believe it's called high probability chart patterns, something like that, where we show you the structure within the structure, trade setup for a ascending triangle. Okay, so this is actually ascending triangle because you have the horizontal line and you have a trend line. Okay, if you had watched that video, then you will know that this is actually a very good setup, because you have a big, big movement up here, and then there's a very nice engulfing pattern right here. Okay, I will find that link to that video, and I'll leave a link to that video at the top right and at the end screen of this video, so that you can check it out next. Okay, but bottom line is that this is bullish. The only problem is that there is resistance right here, and if you look at this spike high, so if you were to take this trade, then you are actually betting that this breakout will be valid. Okay, if not, the other way is to just be patient, wait for price to come back down here, give you a nice candlestick pattern, and then you take the trade and hope that it breaks out like this. Okay, so multiple ways to trade it. The other way, of course, is the traditional way of waiting for the breakout, and then wait for the retest of the key level, and then you take the trade up again. Okay, so depending on how advanced you are, okay, if you are a little more advanced and you've been studying our materials, then you can actually go ahead to try to get a pre-breakout trade just before the breakout. Now let's go on to the last currency pair, which is pound yen. Pound yen, it's also bullish, okay, ascending triangle. So let me explain to you why this is a bullish market condition. Now, if you switch to the line chart, you can see that it's been a very clear uptrend, and then you have a swing high here, you have a swing low here, and you have a higher high right here. Okay, more importantly, this swing high here hasn't been broken. Sorry, this swing low here hasn't been broken. Okay, so this market structure is still valid, it's still bullish. So right here, you can see that, let me just clear this, you can see that a price is actually being resisted. This is a very strong resistance. You can see that there's a spike high here, and if you were to look to the left, right over here, you can see that this kind of resembles a left shoulder, hit, and right shoulder. That's why this level is very strong. Okay, so my advice would be the same as last week. Okay, I would recommend just waiting for price to retrace down here. Okay, try to get the confluence with the left shoulder, the trend line, and possibly this one you move up. Okay, this horizontal support here. Okay, this will be a very high probability trade setup because you have multiple confluences. Okay, you have the market condition on your side as well. Okay, I don't really recommend trading the breakout here, because I think that by the time the breakout happens and the retracement happens somewhere here, okay, the risk to reward will not be that good. Okay, you probably will get in something like this. Let me show it to you. Okay, something like this. By the time you get the confirmation candle, it could be an engulfing pattern or a pin bar, you are probably going to get in quite high up already, and you're very close to resistance. So I don't recommend trading the breakout pullback setup. I recommend just waiting for price to retrace lower. Okay, again, we might or might not get it, but just focus on the setups which are high probability, and you should be fine. Okay, so that's it for this video, right? Please make sure you grab this day trading guide if you haven't. Again, it's free, and we show you how to read candlestick patterns. We show you how to read the stages of the market, even have a candlestick pattern cheat sheet. Okay, and at the same time, please make sure to join our Telegram channel. Okay, it's totally free. We send you our signals every single week, and you will learn a ton of new things over at this channel as well. If not, thanks for watching. Don't forget to subscribe, and I'll see you in the Telegram channel. Trade safe, right? Have a good trading week ahead.